Delighted today to be joined by Nigel Bolton from BlackRock here at the Morningstar Conference. Now, Nigel, you had the big one this morning talking about Europe, which is what a lot of the advisors here are obviously desperate to try and get some clarity on. I suppose we really should start with just talking a bit about Greece. What are your thoughts, in terms of it? When we'll exit the euro, and what will happen to Europe if that does happen?
I think
what are the implications?
The situation with Greece is still very unclear, and one of the things that investors hate is uncertainty, and this is why you're seeing this this volatility that's around there at the moment. My personal view is that Greece is very challenged. It will very much struggle to achieve the targets that have been set by the Troika. And ultimately, I have to personally question whether Greece will still have the conviction to continue with its membership of the euro in the longer term. So from an equity investment point of view, I really don't see much that's appealing at all at the moment in Greece. We don't have any investments in our portfolios at the moment in Greece. We're watching the situation. There is potential value, but I think the uncertainty factor at the moment in terms of what is the currency, what is the political framework that you're going to be buying into over the longer term are so great that we just don't think that potential value is worth really playing with at the moment.
And what about the contagion risk here, especially for the other peripheral nations? Even if it manages to struggle on another few more weeks, are there big concerns there, or do you think the eurozone as a whole can sort of come out of this and help some of the peripherals along
I think
with it?
A lot has been done over the last 12 months in terms of building kind of firewalls around the eurozone, providing liquidity for the banking system. So I'm actually much less worried if there was to be if Greece was to move out of the eurozone. I'm much less worried now about what the contagion impacts will be than maybe I was 12 months ago. It doesn't to say that the markets won't worry about it on the instant it happens, and you will see certainly some volatility around that. But I think actually that could be a very interesting time to picking up some real bargains around the place, because I think the fundamental difference in the economies is very, very different between Greece, between Spain. Italy I think is a very different kettle of fish completely, and Ireland as well. So I'm much more confident in the abilities of those economies to remain within the eurozone on a longer term basis than I am maybe about the Greek economy.
And what about trying to get investors back to the region? This is probably the hardest sell of any sort of country at the moment, any region at the moment, getting people to invest in Europe. But what are the key messages you're saying to them about, as you said, some attractive valuations there? The
key message is, look at the companies that you're investing in. Look at where their earnings come from. Look at where their revenues are being generated. 57% of revenues of European companies comes from outside the eurozone area. 57%. Now, they are not impacted directly by what is happening within the periphery of Europe, within the eurozone completely. So, to me, there are some great companies which are on cheap valuations because people are worried about Europe. They read the headlines, they read the economies. Warren Buffett had a great saying, and he said, be greedy when others are fearful. And I would certainly look very closely at some of the opportunities that are out there at the moment in Europe. And we have a range of European equity funds at BlackRock, which have got some great companies in there, which are providing growth despite what's happening in the eurozone and the economies out there. So think about the companies you're investing in and look at the value and the opportunity that they provide at the moment.
Is there any particular sectors or particular companies that you can just mention for people listening to this? Are there any sort of areas that you think are really...
I think there are a number of sectors within the market that actually are quite attractive at the moment. I think the energy sector, some of the large cap oil stocks, if you look at some of the yields that they are trading on at the moment, if you take an example like a Royal Dutch Shell, 5.4% yield at the moment. To me, that's a really attractive yield compared to what you can see in the corporate bond markets, what you can get on cash. And it's a company that will be here for the very long term, that will be able to grow its dividend over the longer term as well. So I think there are some excellent companies out there that are in that position. I think if you look at the industrial sector within Europe, the consumer discretionary sector, there's some really attractive companies out there. I have a slightly more cautious view in terms of the financial sector. I'll be a little bit more selective in that area of the market. But I think consumer staples, consumer discretionary, energy and industrials are some really attractive companies out there in Europe.
And just finally, is there one event or something that would happen that you think would really get investors back, get confidence back? Is there another? We saw that with the ECB action earlier in the year. It steadied things. Is there something on the horizon that you think might do this, or do you think it's going to be continued volatility for the rest of this year?
Our view was that the LTRO and the fiscal compact, which came around the same kind of time, provided a kind of a time gap, if you like, for economies to sort themselves out, for the politicians to decide on how fiscally integrated they wanted the Eurozone to become. And I think ultimately over time, what you have to see is greater fiscal integration. And I think, an adherence to the roadmap or a redefinition of the roadmap of the fiscal compact is important. I think there is going to be a bit more focus on growth, whether we're seeing that in terms of construction, special construction projects. I think that's something we should look out for over the next few months. But for the long term, what you require is greater fiscal integration, and actually then you realise that as a whole, the Eurozone actually is in a much stronger position than the US. It's in a much stronger position than the UK. But at the moment it's too fragmented. We're not seeing the one political direction, and that's what's key to getting us out of this mess in the very long term.
Thank you very much for that. Thank you for your time.